Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the data of Bitcoin, taking a look at who's buying, who's selling, where Bitcoin is flowing. We'll be taking a look at the macro picture for BTC, review what's been happening over the last kind of 24, 48 hours. Has that changed our bigger macro picture? Are we still looking bearish, or are things about to turn? As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, guys, check it out. You're missing out on a whole ton of additional content. We actually cover a lot more for our members, so if you're looking to become a member, then the Discord is definitely the place to be. We do a lot for free down there as well, so why not check that out, linked in the description below. Let's jump right down into this one. There's a lot of things to discuss. There's a lot of fun things that have happened in the last few hours, and yeah, we're below $20,000 Bitcoin at the point of recording this video, something that a lot of people in the comment section just thought was never going to happen. This is also a pretty clear indication that we are not as bullish as maybe a few people in the space thought that we were. It's also a lot of things going on from a real world point of view, right? We've got a lot of interest rate hikes that people just thought were never going to happen again, and they thought that it was inflation was beat and all that BS. So essentially all of that is not going on. We have a lot further to go. We are nowhere near done, in my opinion. So let's go and take a look at the on-chain data to start with, right? So up here, top right-hand corner, as we talk about all the time, we have three boxes: inflows to exchanges, outflows from exchanges, and the difference between the two. We saw a lot more going on to the exchanges than was coming off, but it was reasonably neutral. It wasn't bullish, it wasn't bearish, it was kind of flat. We can see here that we're still positive on exchanges. More Bitcoin's gone onto the exchanges than has come off, and this is 1.47K. Now, I will say that there's a possibility here that there's actually a lot worse data. My data only refreshes at midnight UTC, which basically means I've missed out on the last 8 hours, and I think a lot more has potentially flowed onto the exchanges in that time. So tomorrow's update is going to be really, really interesting to see how these numbers have changed. So basically, yeah, we're 1.8586 million going on, 1.8572 million coming off, difference of 1.4 thousand Bitcoin, right? It's not a lot of Bitcoin, it's very neutral. This was higher, it was about 6,000 a few days ago, so a little bit's come off, right, during this kind of dip to the downside. We can see that it's incredibly flat still across both of these graphs. I'm not going to go into them in detail. You can kind of see exactly what's going on there. Basically, since December, there was basically a transfer of wealth between individuals. Retail was buying, whales and institutions were selling, and yeah, that's kind of the story. So if we go ahead and jump over into the inflows and outflows, you can see how these lines have been dancing around each other. Nothing too unusual. The big unusual thing here is we're short of volume by about 1 million. When the previous bull market started, we had well over 2 million in volume going through, like nearly actually 3 million at this point. Whereas here we're about half the volume of what was going on when the bull market started back in 2019. So we know that we had low volume, only really retails coming in and institutionals were coming out. Smart money was coming out essentially. So not positive. And we've been talking about this pretty much since January, since we kind of started to see a bit of a move to the upside. We were expecting a bear market rally. We've seen a bear market rally, and now we're seeing the fallout of retail thinking that they were in a bull market. Now, as we kind of take a look at certain wallets, we can actually get an idea as to kind of the most vulnerable people who are going to be affected by this. So here we have Bitcoin Dust. This is basically anyone who has, or a wallet that has over 0.01 BTC in it, right? These are potentially the most vulnerable retail investors. They've got a little bit invested that might be really meaningful to them. They haven't got huge amounts of money to kind of throw at crypto, but they want to get exposure, so they bought some Bitcoin. My concern here is that they're going to act over emotionally and, you know, to basically just succumb to selling pressure. Now, it's not a lot of money to most people to have 0.01 Bitcoin, but to these particular individuals, that potentially does mean an awful lot to them. So as the price comes down, these guys might succumb to a fair amount of selling pressure. Hopefully that isn't the case, because as I said, these are the most vulnerable. I don't want these guys to be suffering in the way that I think the market wants them to. Now, as we go up into the other retail size wallets, we have three different kind of demographics. We have the krill, which is over 0.1 Bitcoin. So, a little bit more than the dust side of things. Then we have the shrimps, which are over 1 Bitcoin. And then we have dolphins, which are over 10 Bitcoin. Now, essentially what you end up with is you end up with the high net individuals on the left there. In the middle, we end up with your kind of retail investor that wants to invest a sizable amount. Maybe they had an aspiration of acquiring 1 Bitcoin. So they got some sizable money. Maybe a reasonable amount of their life savings are in crypto, in Bitcoin. And, essentially, I think they are going to succumb to selling pressure as price comes down and they see their savings decreasing even more. We have to bear in mind there are some pretty scary stats out there that 2/3 of people in the UK just simply don't have savings. So it's not looking overly great from the way that inflation is going, the way that interest rates are going, the way that it's most probably going to occur that jobs are going to be lost and we're going to see a lot more people unemployed. There's going to be a lot of selling pressure that's going to occur because in order to survive, they have to sell off things that they currently have. And I think that's going to be Bitcoin and altcoins and all that kind of stuff. So not only do we have those things, we also have a lot of fear coming into the space with regulatory issues over in the US and Ethereum being called security and all that kind of stuff. So there's a lot of things to kind of consider here. Now, ultimately, all of these have come up significantly since FTX's crash and their kind of downfall. And we can kind of see that we're waiting for these guys to sell, because until these guys are selling, we are not really going to be seeing the institutional players accumulating. You got to bear in mind it's a sum zero game, right? One person is selling and another person is buying. You can't have all wallets going up. Okay, someone has to be selling their Bitcoin in order for someone else to be able to buy it. So if we see retail holding out this way, then there's no way for institutional money to really come in. So institutional money can only come in when someone else is selling it. And I think it's going to be the retailers that are going to end up selling their Bitcoin to those institutional funds. Now, if we take a look at the institutional funds, we did see yesterday that was a bit of a bump to the upside when it comes to the whales, right? We can see that the sharks are coming out after doing a fantastic trade, because the sharks are the traders, 100 Bitcoin or more. What they did is they accumulated Bitcoin way before the pump, okay? They did this in early December, price rose up, and they've been taking their profits. So we can see that these guys are selling, and they're selling directly to the retail investors, or also a little bit over here to these whales, right? Now, I don't think necessarily I was hoping that this would be an encouraging sign, but it doesn't appear to be that way. We have come down now to 2010 wallets as we kind of come back down in price a little bit. Now, normally as price goes down, these guys do accumulate, but again, you need someone to be selling, and I don't think the sharks really constitute exactly what they're looking to buy. But that being said, it'll be interesting to kind of see how it plays out. For now, we're keeping a very close eye on who is buying and who is selling, and what I need to see is we need to see retail sell if we want to see big money coming in, and it is the big money coming in that is going to take Bitcoin to those prices that we need it to go to, or that we suspect it's going to go to in the future. So we can't rely on retail money to do that. So what we need to do is we need to see, unfortunately, pockets of retail sell their Bitcoin to the institutional investors for them to be invested to a point where they can hodl a significant amount of Bitcoin and basically push that price upwards. The problem with the retail is it doesn't work together. It can, of course, push the price of Bitcoin if it worked collaboratively together. We've seen this with Wall Street Bets, for example, way back in 2020. But when it's unorganized and sporadic and greedy, you're not going to find that the retailer is going to be able to move the price of Bitcoin in that way. So you need the smart money to be able to do so. And of course, the Kraken is doing what the Kraken does best. Do watch out for that one, because I think that's going to completely flood that market. Here's what it did in 2018 at some point in the future. This is where it is up to right now. So we can see it's been accumulating just like it was accumulating in the bear market of 2018. It will eventually flood the market. And that's what the Kraken wallet is designed to do, right? It is manipulating the market price by controlling the supply. Anyone who understands how price movement actually works, it is supply and demand driven. Nothing else really matters. So you can think about what controls the supply, tokenomics and all those kind of things, and what controls demand, what's going to get the hype and all that kind of stuff. But ultimately, it's supply and demand, like everything else in the world. So we have to kind of consider those. In terms of our whales, they come down quite a bit. They had this little bump to the upside. It was giving us a little bit of room for encouragement. I'm hoping that there's going to be somewhere that they can buy. If they can't, then well, we'll see how that kind of goes. It's not the first time we've seen a spike like this and then continue to sell down. So yeah, we'll keep an eye on it. as we usually do with the daily updates. So let's jump down into the charts on a bigger macro, right? So we understand that the market is reasonably neutral with the inflows and the outflows, and that there's wealth transfers occurring. Basically, at the moment, it appears that the sharks are selling the Bitcoin that they bought up pre-December and are now offloading that to people, and have been doing so since we actually got to the peak of this recent run upwards. We also see that essentially whales have been selling a little bit. They accumulated a little bit as well, nothing major, and we'll see how that kind of goes. But ultimately, the market is very, very neutral. It'd be interesting to see what happens over the next 24 hours or so with the data as it updates at midnight UTC. So tomorrow's update is going to be really, really important, so do watch out for that one. On this weekly chart, using Smart Money Concepts by 𝗕𝗓𝗪𝗀, you can see that we entered into our little fair value gap. I'll talk about these all the time. Essentially, price wants to come back down and gravitate down towards these. We're finally in this box. It's basically between that 20.5 and the low side of 17.2. Okay, so ultimately we're going to have to come all the way down into this low range. Now, anyone who caught the video from this morning, you obviously know my thoughts and opinions on where I think the market is going. We're going to have to come down a fair bit further. As I said, we are not in a trend to the upside. I've said this many times. We are not in a 1, 2, 3, 4, 5, as much as people want that to be the case. I've been through this a dozen times, but for the case of this video, I will do it one more time. I'm going to zoom in all the way to this beginning move over here. Okay, one of the things about this particular structure that people seem to be forgetting about, okay, is there are rules that have to be applied when it comes to 5-wave structures. Okay, now 5-wave structures, I'm going to actually just clear out all of that. Right, 5-wave structures, find a little empty space right here, have very specific rules, okay? And if you're looking for more information, check out the cheeky score. I'm just going to do a brief little education right here. Okay, so this is impulsive, right? This is what you would expect. You'd have in your wave 1, right? This is what people are expecting. In wave 1, down at the bottom here, right? It should be 5 waves. It should be 1, 2, 3, 4, and 5, right? And it should follow the same rules. Wave 1, okay, will be a typical kind of, 5-wave structure in itself. Okay, wave 2 can retrace pretty much between 50 and 88.2%, but cannot go past the origin level of wave 1. Wave 3 has to be 1.618 times of wave 1. Okay, wave 4 typically is 38.2% of wave 3 and does not cross wave 1. And then wave 5 is typically between 1.236 and 1.618 of wave 4, right? That's an impulsive structure. However, sometimes you get diagonals. Diagonal structures have an overlap with wave 1 and wave 4, like so. And wave 3 still has to be 1.618 times wave 1. Okay, and wave 5 can kind of many different kind of rules, right? Essentially, usually these are 3 waves up, 3 waves down, 3 waves up, 3 waves down, 3 waves up, 3, 3, 3, 3, 3, right? And that's kind of what you get. So in the structure of what we're looking at right now, in terms of Bitcoin down here, a lot of people are assuming that this is a diagonal. They go 1, 2, look, 3, 4, and 5, right? And they do that. However, wave 3 does not meet the requirements of 1.618. So we know it's not a diagonal in that sense, right? We can check this. We can see that no, 1.618 is all the way up here, up at that high point there. Okay, and then it would have created an invalidation anyway at that point. So no, not quite what's going on. Now, the other way of looking at this is, okay, well, it's not a diagonal. Is it an expanding diagonal? Well, an expanding diagonal would basically be only valid if wave 3 was not the shortest wave, but wave 3 is the shortest wave in this particular ground, in this particular scenario. And the same with a contracting, it can't be a contracting. So again, wave 3 wouldn't be the shortest, and wave 3 is currently, unfortunately, the shortest. So we know it's not a diagonal structure of any sort. And I've been through this a dozen times. And the reason that this is really important is it means that this is corrective. And if this is corrective down here, right, it means that we are not in that trend structure that people really were trying to push. They were trying to push this narrative of a trend, and that isn't the case. So instead, what you end up with is you end up with a 3-3-5 structure, a regular flat correction. Okay, so you end up with that, and then of course we're where we are now, and we're moving down. So ultimately, we've been talking about this for a long time. It's one of those things that a lot of people don't want to acknowledge because they don't like to apply the rules properly. But anyway, theory is just rule-based. You follow the rules. If this, then that. It's very, very simple if you follow the rules. If you try to bend the rules and say, oh, it's close enough, that counts, then things are going to go wrong, horribly wrong. So essentially, we are. Run over. we're not in a trend upwards. So this basically means that we're not in a correction that can be defined as a wave 2, because if we were in a trend upwards and you look at this as a wave 1, then all this is just, okay, it's a natural correction, it's a wave 2, right? And you can't go down lower than the origin level, then you go 3, 4, and 5, and so forth. But because we're not in a trend upwards, there's no rules preventing us from doing new lower lows, right? Which basically then means, well, where are we going? Well, for that, we can quite easily take a look at our structures moves over here, and we have our Z wave. Okay, our Z wave is a WXYXZ coming down, and this is anchoring in at $10,000 to $16,000. Could be anywhere in there because the structure of a Z wave has so many different patterns it could be. It's not like it has one straight target, right? You can't say a Z wave is only ever going to be 1.236 of the W wave, right? It's a possibility that it's a 1.236, but it's also a possibility that's a 0.618, and so forth, right? So we end up with this area. It's quite broad. It can be anywhere in there. So you have to pay attention to the structure that's forming inside that Z wave to give you a more accurate picture. But for now, considering we've only just started this, it could be anywhere between $10,000 and $16,000. Now, if we go and touch the top end of this, there's no new lower low. It's just a double bottom, right? And that's fantastic because then, you know, the bottom is in and you can be fantastic about that and you can think about going to the moon afterwards. Ultimately, after a WXYXZ, there is no further downside. You have to have a bigger correction upwards if you want to continue the move to the downside. Possible, but, you know, again, it's been dragging out for quite some time. So $10,000 to $16,000 is the range there. Now, from a bigger macro piece, we can obviously see not only would we get rejected from the 200 EMA on our weekly chart, we also can get rejected from our area of supply. This is basically the supply that was formed back in July of 2022. We've now tapped into it again and got rejected from it again. Okay, and we're coming down. Now, a lot of people will argue maybe we're in a Wyckoff accumulation. I've kind of gone through that a few times. We technically have avoided that potential pattern. Maybe I'll revisit in the future, I don't know, but I don't think it's really something that's playing out. But ultimately here, we do see this move to the downside. We're now resting on this support level at the moment at 19,798, thereabouts, and it'll be interesting to kind of see how that kind of plays. Our main focus area was always going to be moving down in these price charts a little bit. 17.6 to 18.8. This is a previous area of support. We broke it. We turned it into resistance. We broke through it. Are we going to test it as support again? Be interesting to kind of see. And of course, our main focus area is this one down here, 11,600 to 13,900. This is the area that we were back up in June and July of 2019. We broke through it. We haven't retested it. We want to find this as a support. This could be a fantastic place to find it. That would tie in very, very nicely, not only with clearing out all of these fair value gap areas that we had here, but also falling into our Z wave overall. So essentially, Bitcoin's looking pretty good. We are in a pretty good position, I think, to kind of see this play out. Looking forward to accumulating as much cheap cryptocurrency as possible. And I think we're finally on that journey. After this, I'm hoping to see the data backed up in the on-chain metrics. So I'm expecting to see whales buying and retail selling during this move to the downside. It can take months, so don't think this is going to be something that plays out very quickly. I imagine this is going to be the rest of this year kind of just grinding slowly towards these end goals. I could be wrong, and of course I would acknowledge if I am, but essentially I think we're finally kind of getting that progression that we need to see in the space, and we're heading in the right direction to kind of be able to put this to bed, right? We want to see the whales buying, we want to see the retailers selling, and we want to see these lows get hit. Let me know what your thoughts are down in the comments below. I'm going to leave the video there. Don't forget to subscribe if you haven't done so already. Join us in Discord. If you're looking for a bit more from the space, then why not check out our membership as Patreon, or maybe even the join button just down below this video on YouTube. Link that up to the Discord server, and you're going to be absolutely amazed by the extra benefits that you find and all the fantastic things that us and our team are doing down in the Discord server. Until the next one, though, guys, have a fantastic day.